we teased this a little while ago. I think we haven't really talked this out, but about the role of private equity in all this. Like, so how is that distinct then from, say, the role of the big financial institutions and public companies? What role does private equity have to play in all this?
Look, private equity means many things, but it is, for those of your listeners who are less familiar with the world of private equity, you would have heard the term, and you would have heard the term venture capital, and that conjures up some ideas, perhaps more Hollywood ideas than anything else. But really, it is the source of capital that is less structured and governed by the scrutiny of big regulated markets, more institutional capital. So public markets are really the domain of listed companies, stock markets, where corporations of a certain size list, and the world of capital markets and listed entities is one aspect of capital raising. Then there's this world of private equity, which is, I wouldn't say a tier down, but addresses a whole different need, and that is where newer businesses and growth businesses source capital from. So I'm not talking about going to a bank or going to a debt provider and getting a loan. I'm talking about investment, equity investment, where individuals or companies take a stake within your business and buy into a vision, and buy into your ability to execute on that vision. So there is often less need, or there is no ability to pay a coupon or an interest rate because you haven't built your business yet. So the only way to get capital is get someone to believe in your vision. Now, that is an incredibly important role to play, and has always had an important role to play. The issue, because of what I've described with private equity and venture capital, is the way in which it's designed is it is high risk, because people say, well, okay, if I'm an investor in private equity, of which, many an institutional investor is, it's a high risk category because you're investing in businesses that are still on their growth spurt and anything could happen to them, especially look at this pandemic. I mean, how many young businesses are going to survive? So my money's at risk. So what happens is that money generally is tied up in a vehicle, in a fund, for a fairly long time with no repayment, right? No investment return. And investors in private equity accept that. It's like, okay, I'm going to make that allocation. I'm going to sit on my hands for 10 years. And whatever you do in that little black box of yours, just give me a good return, right? Because I'm risking on you. The issue is that the cascade effect of fund management and private equity, not pervasively, but to a large degree, has been an excuse, so to speak, to build portfolios of companies where the margins to operate those portfolios are razor thin, right? There's very little buffer for the fund managers and GP practices, or essentially investors that run these funds in private equity, to actually give too much to the portfolio companies. And what they do is they essentially bet on one or two unicorns, right? And the rest, like, whatever, right? Now, you can understand why that's happened. And there's been some amazing companies that have come out of venture capital, and, venture capital is many things and it looks very different around the world. But the dark side of that is there's very little transparency. And when you look at impact and impact investing and these newer business models that are coming to market, there is so much that is needed in terms of transparency, because how do you know what these companies are doing, right? So the same governance and scrutiny that's going into capital markets, i.e. the allocation of capital and the monitoring of capital, needs to apply to the investee companies in private markets, because they're the ones that are actually potentially going to be the big game changers, these new market makers. And yet in the current structures, they just bundle together, and the fund managers hoping for a home run and one or two companies to make him or her their money. So the nature of private equity is needing to change. It's going to need to be a lot more patient, not just in terms of timing, but how it nurtures and feeds its portfolio, how it brings knowledge to its portfolio, how it brings transparency. I would expect that there'll be new frameworks and new governance being placed into private market capital allocation to make it much more porous and visible. And that will change the nature of this space, I believe. So I talk about sustainable venture capital, and those are some of the signals that I certainly would like to see in what's needed.
If you like this video and want to check out the full interview this is an excerpt from, you should see a link to that full interview somewhere here on the screen, and I'll also put one in the description box below. If you enjoyed this video, please consider liking it, and do subscribe to the channel if you want to stay up to date with all my videos as they go live. So thank you so much for watching, and stay curious.